Hey, I'm Nick, and in today's video, I'm going to teach you how to do exactly what the title of this video says. Make money trading even if you're completely freaking wrong. So let's get started. And by the way, if you're a regular viewer here on my channel, remember to hit the like button as usual. I always appreciate that. Y'all have helped this channel blow up the past few months, and I really appreciate you hitting the like button. And if you're new here, consider watching this video as well as a couple other of my videos, and consider subscribing if you like my content. I work really hard to put these videos out for you. Make sure you watch this video the whole way through. If you just watch the first 1 or 2 minutes, it probably won't help you. If you don't have time to watch this video right now because you're at work on your lunch break or you're in the bathroom taking a dump, it's fine. Just hit the watch later button here in this video so it puts it in your queue, and you can come back and watch this video later whenever you have the time to actually do so. So without further ado, let's get started.
All right, so how to make money even if you're wrong. First, let's start off with how most people look at trading, okay? And I still look at trading this way to a degree, but I just want to put this into context here, okay? Most people are black and white about their trading, right? I've got my win rate, the risk reward ratio, I risk like 1% per trade, and focusing on all these things, it generally produces growth provided that you do it correctly with a working system and a working approach, okay? So you have slow and steady growth, maybe like 20% per year. So this works great if you're swing trading like super large capital, like a couple $1 million in capital, or if you're like a hedge fund manager managing multi-billions in capital, like a $10 billion hedge fund, 20% return per year after fees and commissions is like $2 billion. That's great. It's great for investors. It's great for everyone. But if you're a trader, and most people have less than 100K that they're actually going to personally trade with of their personal capital. I mean, even if you have 100K, like think about this, right? You risk 1% per trade. You do good. You have some losing months, some good months, some break-even months. Let's say you come out and profit at the end of the year about 20%. That's hedge funds would kill to be able to have that kind of return. If you do that as a retail trader with low capital, and this is, like I'm saying, this is just 100K. Most people don't even have that to trade with. But just for the 100K, you came out on top 20%, that's 20K profit for the year. After you pay taxes on that, assuming whatever your tax bracket is, let's say you only pay like 5K in taxes, what you're left with is around 15K. All right, now to put this into perspective, you could get a job at McDonald's and just work minimum wage for the whole year, and you could have made more money doing that than you could have trading your 100K in capital. So then the question becomes, all right, what the hell do we do? Like, how are we actually going to make money? Well, you can look at trading a little bit different. You can have a different approach. So here's a different perspective that I want to offer you here. Trade based on what you think is likely to happen, okay? And then manage your positions based on what begins to occur after you've entered the market. And it doesn't even matter if you're right or wrong. Now I'm going to give you some examples of some trades that I've taken this past week. I've traded this live on live sessions with Mission FX clients, and I've also called a lot of these trades in Discord in our students community. And you can more details about that is in the description of this video, but I'll show you what I did right here. So there's a couple areas on GJ that I was looking at, and really my approach is super simple. It's just support and resistance zones, okay? Now this is a scalping system I use, or it's a scalping approach that I use. I wouldn't really call it a system. But the way this works is essentially all I do is I just draw support and resistance zones in the chart when I'm scalping GBPJPY. And I just look at the zones and I try to figure out where it's likely that price is going to bounce at, okay? And I'm not even right, but about maybe half the time, okay? But it doesn't even matter because 99% of scenarios, I still make money, okay? So this may sound insane. Like, how can you still make money even though you're like wrong half the time? Okay, it sounds really weird. So whenever you think of normal trading, right, this is the normal approach you think of. There's a resistance level, price breaks above, it's in an uptrend, comes back, retest, starts to bounce. And so you think, all right, I'm going to buy right here. Okay, I'm going to buy right here. I'll put my stop below the level. I'll put my target above. All of this can be, contingent on whatever your system is. But let's just say your trade looks something like this. Or you're buying in an uptrend, you've got a stop loss, you have a target. Okay, if price goes into profit, hits the previous high, but then comes back down, if you just have a black and white trading system, which is just hold the trade to the profit or stop, I mean, that can work depending on what kind of data you have and what kind of trade filtration system you have for like figuring out which trades you should and shouldn't take. But in most cases, it's not going to be as effective as opposed to if you were to use a little bit of intuition, a little bit of speculation, a little bit of experience on how to manage that trade. So you'd be in this trade, and if you're a black and white trader, this could come, break even, go sideways, end up coming down, hitting your stop, or it could stop you at break even if you had your stop here, or it could go up and hit the target, or it could come down here, and if you're wrong, then you lose money, and then that's that, okay? And you lost money on this trade. So let me show you this different perspective, okay? Just a reminder to hit the like button. That's what we're here for. Just a reminder to hit. So if we just back up a little bit here, you have a potential outcome that you think is going to occur, right? And we'll zoom in here just to make it a little bit more clear. Your potential outcome that you think is going to happen is that price is going to push up, make a higher high, and you're going to profit if that scenario happens, right? But what the hell happens if that doesn't occur? Okay, there's multiple ways this could play out. It could push up here and touch the previous high and come back, right? It could go make a higher high. So we'll just draw a couple of these out right here. Could go up, hit the previous high, come back. What about the opposite outcomes, right? Price could also break below this zone. And if it breaks below this zone, it's likely it could come back here to retest it and then come down. If you look, there's also a previous low right here. This is a support level. Oftentimes these levels will go back to be like an area where price previously respected. So it goes up and then it comes down, things like that. So it could come and test this support level and then bounce back up and then find resistance right here and come down. There's all sorts of things that could happen, right? The price could just continue ripping through this support level and come down here to wherever the next support is, and then it could bounce right there potentially. But there's all these different outcomes. If you have the perspective of most traders, you're just thinking about the one outcome you think is likely to occur, which is that right there, right? But you're completely blind to all these different outcomes. So let's say, like, what happens if you enter this trade and then it doesn't play out in the outcome you thought it would? Instead, it starts going down here south, right? So I'm going to take off these two outcomes because we're going to say, let's say that doesn't work out, and instead price starts dipping downwards. So price starts dipping downwards against your position, and let's say that you have a position right here. I'm going to highlight this little blue dotted line. We're going to say that's your buy position. You bought, you're hoping it goes up, but if it doesn't, whatever. So price starts going down against your position, right? So you're in drawdown. If you have a stop loss on this trade and it's right here, you'd probably get it hit. All right. But what happens if it just comes down here into the next support zone and then it starts to bounce right there, right? Price could bounce there as support because price bounces at support and resistance. You don't know which support and resistance zone it's going to bounce at. Nobody does, right? It seems completely freaking random when you look at a chart which support and resistance zone price is going to bounce at. You have no freaking clue, right? It's probably more likely to bounce at maybe higher time frame support resistance zones, but even then, price routinely will ignore daily support resistance zone and just smash through them. And if your buys at a support zone on the daily chart, you'll get stopped out and you're like, what the hell? Why didn't it react there? This was a major zone. There's all sorts of fundamental news events, all sorts of crap that can like mess with your trade and have support resistance zone either respected or not respected. But eventually, like, price is not going to keep on continuing down forever 99% of the time, right? Most of the time, 99% of the time or more, price will eventually bounce at some support zone, right? So for instance, if price starts bouncing right here at this zone, it could go up. Price could bounce here for a little bit, then come down and then continue bouncing up from there. But price is going to move in and out of these support and resistance zones. And here's the little pinnacle moment, is that if you approach it with this different perspective, you can profit no matter what the hell happens, like 99% of the time. And I'm going to cover more details about this in like a couple steps from now. But let's say price comes down to this support level and you're in a buy up here. Let's say instead of getting stopped out, you enter a second buy, okay? We'll talk about how high risk this is and how to approach it in the proper way so that way you don't just lose all your capital trading this because this is not using a stop loss or anything. I get there's going to be a lot of people be like, oh, this is so risky, this and that. Yeah, I totally agree. It's really risky, and we're going to break that down in more detail here in a second. But just focus on the logic behind this. This is a support zone you thought price would bounce at. It tried to, it failed, okay? Comes to the next likely area, super clear support resistance zone you think it'll bounce at, so you buy. Now what happens if price pushes back up to this zone, and it comes back up here to the previous low, to the support resistance zone around your first entry, and you're in this buy right here, and you're also still in this buy, okay? So this buy, you can close it right there, and then you can make money on this second buy that you had, and then you close the first buy around break even. A small loss, a small profit, whatever. So you essentially broke even on your first trade, and you made profit on the next trade just because the market happened to bounce at this support zone instead of this support zone. Well, guess what? With this trade right here being a profitable one, and this trade here being a break even one, your outcome here on this trade was a profitable outcome. And get this, you were wrong. You were completely wrong about the trade. But you waited for price to come to the next likely area it would bounce. I'm not saying just buy it randomly when it keeps going against you, but I'm saying wait till it gets to the next likely area that it would bounce. Usually like a 1 hour support resistance zone, it's perfectly fine. Price will not keep going down forever 99% of the time. It will bounce somewhere. Okay, so what if this outcome didn't play out, right? What if instead price continued going down and it came down to this area? Well, guess what you can do right here? you can buy again down here at this third support area. And then eventually, like I said, 99% of the time, price is not going to keep going. And when it does, that's still fine. We'll talk about that here in a minute. Price, what if it bounces right here, then it comes back up to this support resistance zone? Well, what you can do here is you've got a profitable trade here, you've got a break-even trade here, and you've got a trade losing here. So roughly, if we were to say this was like halfway, right? Let's just say the support and resistance zone is like halfway between the entries. It won't always set up like this, but let's just say it's like halfway. Roughly, this trade will be a profitable one. This trade will be a losing one if you're using the same position size. And then this trade will be a break even. So this winner will wipe out that loser, so it'll be break even. And then this trade is like a break even as well. So if you close all your positions right here, a losing scenario, which you would have taken a stop out here, and then if you would have bought again here, you would have another stop out. Instead of having two stop outs or just any losing scenario at all, you now have a break even scenario where you didn't lose money. And you were completely wrong. And you weren't just wrong once, you were wrong twice. You were wrong here and you were wrong here. But approaching it with the logic that like, hey, I don't know which support and resistance level price is going to bounce at. Who the hell knows? It could bounce at any one of them. It doesn't matter. Wait till it gets to another area that price is likely going to bounce at and then enter another trade there. Wait for it to come back. Get out of your positions at break even whenever price does come back to the next support resistance zone. Or if you're just in two positions, just wait for it to come back to around your first entry, clip out of that one at break even, and your second trade was profitable. Like I said, this happens almost every time where you can get out of a position and either break even in total or still come out profitable even when you're wrong. And what happens when you're not wrong? What happens whenever you're right? Which will happen like, half the time. Half the time it'll just happen to bounce at a specific area. Well, you enter that buy, it goes up to the previous high. Cool. You had a profitable scenario and you won the trade. Great. This happens like half the time, right? Because like the market, it still respects these zones like, whenever, like 25% of the time, 75% of the time, whatever the hell it is, it doesn't matter. You'll be right sometimes just by sheer random chance. It'll come back, break a retest, start bouncing, and you'll get into a buy and it just happens to go right to the previous high, or whatever, make a higher high or whatever. And then you just take profits whenever you think that the market's ready to like turn around and come back and make a higher low. And you're still profitable in that scenario. If this happens half the time at all, half your trades are going to be easy. You'll enter them, they'll go right into profit. I'll show you some examples from trades I took last week. And then when this doesn't happen, let the trade go against you. Let it go against you. Wait till it gets to a super clear level where you're really convinced price is likely to bounce at because it's a super obvious support resistance level. Enter a second position there. Let it bounce right there. And once it comes back a little bit to around your first entry, cut the first entry around break even or a small loss, and then close that second position in profit. This will happen the other half the time. If it doesn't happen and it continues to stretch against you where you got to get into like 3 or 4 positions, eventually it will bounce. Okay? It like I said, 99% of the time it will bounce somewhere. And you don't have to be right. It does not matter whether you're right or wrong. It'll bounce somewhere. And if you're in like 3 positions, right? You're in like 1 up here, 2 down here, 3 up here. Even if it just pulls up back to the previous zone, second position out at break even, third position profitable, first position loss, you still ended up this whole scenario at break even. And guess what? You were completely freaking wrong about the whole thing. And you still came out break even, or you come out profitable, or your first position just goes into profit and you just make money. So imagine if you can do this every time, and imagine if your win rate is literally like 90%, right? It's usually way higher than that. Like me, I've only lost 2 trades in the past 1 month of trading. Scalping GBP JPY. This does not apply to swing trading. It's completely different. In my other videos, you'll see how I swing trade. It uses hard stops and everything. But in scalping on like the minute 15 charts, 1 hour charts on GBP JPY, just trying to catch the bounces of support resistance levels, I have lost only 2 trades in the past like 4 weeks. It's since the beginning of December, so it's actually been a little bit more because right now we're in the first week of January. 2 losses. That's it. And my 2 losses was this over here. I entered sells right here at this zone. Price went up. I entered another sell there. I was waiting for it to come back to this zone to close that sell at profit and this one at break even, but that never occurred. It ended up continuing ripping against me. When it cracked above this high and continued going up, I just cut both of my sells out there at a loss. And this wiped out about 1 day's worth of profits for me. So even then, I didn't even blow the account then. What I'll do is I'll put like a 1K to a 3K account. If you guys are wondering how I compound accounts and the stuff that I've learned from doing it, go to my, I made a YouTube video on my channel. It's called something like how I grew like 3K to 20K in a week, and then I bought a Mercedes-Benz AMG car thing. You can go find that video on my channel somewhere. Just type that in, like 3K to 20K in a week or something like that. I'll show you guys, there's more details on how I did that. But now to be honest, half the accounts I started now at like just 1K, and I'll grow it to about 10K. Then I'll just withdraw the profits. I'll internal transfer them to the main account, to my main account with CoinEx. And then I'll just do this over and over and over again. And sometimes to do it quicker, I'll start with 3K because there's like more leverage. CoinEx gives me a 1 to 500 leverage. And then with that, I'll take the 3K account to like 15K. Then I'll withdraw the profits. I'll put like 10 to 12K back into the main account. And then I'll start that account again at 3K. And I'll do this over and over and over again until the account inevitably blows. Because there will be, like, even if you take a 3K account to 15K, you can just do this over and over. And let's say you get it right 2 or 3 times you do that, right? So you've made like 45K in profits. And then you start another 3K account. And then you trade that for like a week. And then you end up blowing it because the market just runs away from you and it never comes back. Cool. So you lost a 3K there. Meanwhile, you made 45K in profits. You have a net profit of 42 grand, and you could do this in like a month or two, like just as long as you continue to just rinse and repeat doing the same thing over and over again. So this is the perspective I'm trying to get you guys to understand is don't think of it in just terms of black and white. Like my level is here. This is my trade setup. I have my entry. I have my stop loss. I have my target. Like really question that and look into it a little bit more and start saying, okay, if I enter right here, sure, I'd like it to go up. But if this doesn't start working out, like where are the next levels where price is likely to bounce at, right? And you can set alerts near those levels. So that way, in case you're wrong, like you have an alert here at the high, if it goes up, cool. You have a TP set right there, or you just close your trade right there once it gets to the previous high. If it doesn't work out and it starts going down, we'll have an alert at the next zone, buy it at the next clear support zone. And if it happens to bounce right there, which it will most of the time, then you wait for it to come back up, then close it out at your first entry, and the second position was profitable. And like I said, imagine if you just do this and it works almost every time, right? And you can risk more and more and more. You can start with like 1 lot going into first positions on like a 3K account. When the account gets past 5K, I go into like 2 lots. When the account gets past 10K, I go into 3 lots for the first position. And I'm fine with like when the account's at like 10K or more, I'll start with a 3.0 lot position. Then if it goes into drawdown to the next zone, I'll enter another 3 lot. And if this pops up to the next zone, I mean, these trades are like $1,200, $2,000. This is how it's so easy to just get the account from like 3K to 15K in like a week or two, because you're rarely ever getting stopped out on something. Like, I mean, you're not getting stopped out at all because you don't have a stop order, but what would happen is the market continues against you. You'll just get margin called and you'll get liquidated and you'll pretty much blow the account. But how often does that happen, right? Barely ever. Like it'll almost never happen unless you're using like the 15-second chart. But I mean, use like the 15-minute and 1 hour chart to get like the clear zones where price is likely to bounce at. And if it goes into drawdown, just simply wait for the next zone and then sell at the next zone. Wait for it to come back to your first entry, get out, profited on the second trade. First trade was a break even. It's such a simple way to manage trades. And if you're using a small balance and you practice this for a couple months, there's like no emotions involved with it. So the third thing I wanted to touch on is who cares if you're right and wrong? Think about it. Who cares? The goal in trading, like think about this. The reason you're trading is not to whether or not you can be right or wrong. It's not about your ego. Nobody cares. Nobody cares if you're right or wrong. The goal is just to be profitable, right? It's just to make money. So think about this. If you're still able to profit on whatever the outcome is, being right or wrong isn't really too important, okay? If you can profit most of the time on scenarios by just entering at clear support resistance zones and just managing your current open positions, and then also managing your new positions as the market begins to develop either up or down against you or for your position, the market moves either into profit or drawdown. You can just manage your positions based on whatever happens in a logical way, and then the way that you manage those open trades and the way that you manage your new entries and your new trades will depend on whether or not you wind up in a profitable scenario most of the time, a break-even scenario like a small percentage of the time, maybe like 20% of the time, 25% of the time, and then worst case scenario, the market continues to go against you like 1 out of every 100 trades, 1 out of every 50 trades, and then you end up blowing the account. But meanwhile, you've already flipped that account over and over and over and withdrawn profits. It's a different way of looking at things. So a couple things to take into mind here. You want to start with a small account. If you've got like 100K to trade with, don't put 100K into account and try to do this, because that would be very sad if you just lost the whole 100K. If you got 100K to trade with, put like 3K into an account, right? this is a small, really, really small balance. And what's the likelihood of you blowing it? As long as you practice this for like a month or two at least, probably a little bit more to be honest, but a month or two at least on demo, get kind of a feel for it, get kind of a feel for like one pair. For me, I trade GBP JPY from scalping. Like that's the only pair I scalp. And I've just gotten used to seeing how GBP JPY moves over the past 4 months. I could just read it like an open book. Like I know like if I enter here and it doesn't bounce, price will move to the next level and I'll enter there. And then if it bounces there, cool, I profit. That's like 80% of the time. If it continues against me, I'll enter a third position, sometimes a fourth position. And when it finally does give that little pullback, I can get out of all my positions at break even on a pullback and then move on to the next trade. And then most of the trades after that, like I said, 80% of them will be profitable. The other like 25% of them will be like break even. Like it is what it is. But start with a small account. If you start with a 3K account and the likelihood of you blowing it is very low, and the likelihood of you flipping it to like 10K, just like 3K to 10K is like not that hard as long as you have some experience. I'm not trying to tell you guys this shit's easy and everybody's going to like make so much money doing this, but I'm saying if you get the right experience, you have the right level of intuition after getting that experience, and you just practice this for a couple months, I mean, it's not going to be that difficult for you to just start a 3K account, to trade like a freaking idiot, just like buy at the support zones and sell at the resistance zones. It's not that hard to get an account from like 3K to 6K and then from 6K to 10K. For me, I stop around 15K because that's a good amount of money. Every time I have a profitable scenario, which is normally after a week or two, I can get it from 3K to 15K. Then I just internal transfer like 10K out of the account, 10K to 12K, normally 12K. And I'll put it into my main account with CoinEx and I'll sit that there every month. And this is just with GJ, not even counting swing trading, not counting crypto, not even counting stocks, just FX. I'm making anywhere from like 20 to 40K a month, only scalping just GBP JPY, right? And like I said, I've lost 2 trades in the past like 4 weeks. It's been over 4 weeks. I've lost 2 trades. Every other trade scenario has essentially been a nice winner or around break even. Sometimes it'll be like minus 100 or minus 200, but I consider those break evens. I don't consider it a loss unless it wipes out like more than a day of profits. And I mean, like it's, oh my God, it's just so straightforward. So start with a small account compared to your capital. If you only have 1K to trade with, I would start with only like $100 in an account. Get that $100 to like, $500, get that $100 to like $1,000, withdraw most of the profits back, start again with maybe 300, and then keep on doing this. Because worst case scenario, if you blow that $100 in the first try, whatever, you still have 900 left to trade with. So out of that 900, you put like another 100 into an account, and you just keep doing this over and over and over again. You just keep on trying it, keep on getting experience, keep on figuring out like where's the best places to buy and sell at, and managing your trades. Okay. So then you withdraw once your growth target is met. For me, like I said, I like starting with 3K because I can easily use like 1.0 standard lots. For CoinEx, since it's 1 to 500 leverage, I can only trade 2.0 standard lots for every $1,000 in the account. I like starting with 3K because I can start at that 1.0 lot size and I can get it easily like within a couple trades to like 5K. From 5K, I'll start increasing the lot size to 2.0 on the first entries. And again, 50% of the trades I'll enter on the first entry will just go right into profit. I mean, they'll come to a support zone, something like this, right? Price breaks above, comes to a support zone, no confirmation at all. You just buy and it just instantly bounces up on like a 2.0 lot. And so for instance, right here, if you just take this as a break and retest and price pushes up to the previous high, that's 11 pips right there. I mean, that's great. It's like $220 or whatever it is, 220, $240. And you just do this over and over. I mean, every day, if you're making like 1K to 2K, it's not long when you start a 3K account before you'll get it to 15K. I mean, it's just a matter of just compounding and slowly increasing the position sizing as it grows. Okay. So then you withdraw once your target is met. I want to say again, this is high risk with no stop losses. Okay. Has a super high win rate, but this will work to grow a small account quickly. But the way that you're going to remain profitable is that you must continually withdraw profits, because there will eventually be a day where the market just continues to run against you. It goes against all your positions. You enter a position, you add whenever it continues against you, you add a third time, a fourth time, and it never pulls back at all. It just continues against you. It just like a crazy run up. And the market will just never give you an exit. And that means that on that day, you're going to blow whatever remains in your account. So I would not recommend starting a 3K account and trying to grow it to like 100K, because I mean, that's saying you're going to have to go through a couple weeks without having a single scenario where the market runs against you. That I think that's kind of unlikely. Like, I think that's really unlikely. This is just from my experience. I say it's safer if you just try to get an account to like 3K to 10K first. You just do this over and over and over. and then pretty soon, like you've made 50 to 100K doing this a couple times, then maybe start a 5K account. Try to get the 5K to 20K. Then every time you make that work after a week or two, right? You made 15K profit, start again with 5K, do this over and over. You'll have some hiccups where you blow the account a couple times. But meanwhile, let's say you've blown the account 3 times in a month. But meanwhile, you've taken the account from like 5K to 20K like 4 times. Like, dude, you made 60K. That like is fine. Like 60K, you lost 3 accounts, you know, so 60K minus 15K, you still came out 45K in profit for the month. And this is with very, very low starting balance, okay? The way you will remain profitable is by continuing to withdraw, okay? So it's a very profitable way to trade if you only continue to withdraw every time you like 5x to 10x your account. So another thing here, you have to remain cool as a cucumber. You cannot give a shit what happens. You will enter a trade. You just literally the only analysis I have when I enter a trade is when price gets to a clear support level. That price is clearly interacted with multiple times. I just buy it at that support level. There's no rejection, no analysis, here's the Fibonacci pullback and the moving averages is upwards. Like none of that. It's dirt simple. You could be a chimpanzee and do this. It's buy at a clear support level. Okay. I don't care if it's going to bounce or not, right? So for instance, I took this trade here on Friday and I called this in my Discord group. I took a buy right here when GBPJPY got into this 15-minute zone. And what happened is as soon as it went to the zone, my target was here at these previous highs. It got up to the previous highs, started to reject. Then when it came back to that previous high right there, I just closed it right there. Okay, so this move right here, let's just take a look at this right here. It was about 16 pips. Okay, on one standard lot, that's 160 bucks. On one standard lot, that's it. On 2 standard lots, it's about 300. On 3 standard lots, it's about 450. It's almost 500 bucks. That's why as you start increasing the account, especially with scaled in entries, it just starts to grow. Your account starts to cascade into profits like very quickly. Okay. Now, what was my plan if this didn't work, which I don't expect it to work half the time? Very simple. I just have alerts at the next zone. This is another support resistance zone right here. I'll have an alert just before it. And then what will happen is as price gets into that zone, as long as it hits the zone and kind of stops for a second, I'll just buy. In some cases, I'll even have like a buy limit if the zone is clear enough. If that wouldn't have worked right there, right? If this would not have continued, what I did is I have another zone right here at this previous low, and I would have an alert right here. And this is I don't use this GBPJPY Forex.com data. I use FXCM, so that's where all my analysis is at. I cleared this out for this chart on GBPJPY so I could like draw on it and show you guys from scratch. But if price were to continue down here against, I would go in heavy right here again. I'd add another position. And then when price inevitably bounces, which it will 99% of the time, it bounces up as soon as total I'm in like a net break even. That'll be in profit. This will be in drawdown. So this will equal out. So it'll be 0 losses from there. And this position is break even. So everything's zeroed out. Everything's break even. I exit the whole thing with a break even. Completely wrong about the whole thing. Completely wrong, and still was able to get out at break even. But like I said, for me, that only happens like 20% of the time. Usually, like especially with GBPJPY, which bounces around all zones, you have so many opportunities to get in and out of positions. Like so many opportunities. For instance, like last week, there's this right here. This because I took like 10 trades that day where I showed you guys this. Price pushed up to here. I entered a sell. Price came to the next resistance zone. I entered another sell. So I was in a sell here and a sell here. When this second sell came back into profit, closed that in profit, closed the first one at break even, and then I entered a buy because it's a support zone, support resistance zone. The buy went up. I closed this in profit right here, right there on that first buy, and it worked out easily. And then I entered a sell position. So that sell position pushed further up. And then when it pushed further up and came back, I saw the minute 15 still closed bearish underneath the zone. So I ended up still staying in that sell. When it came back here to the support zone, I closed the sell in profit, entered another buy, right? You never know how many times it'll bounce it. Like for Friday, this bounced at 1, 2, 3, 4, 5 times. You never know how many times price will bounce at a support or resistance zone. That's why it makes sense to just buy when price gets there. And if it goes into profit, cool. Yay, you had a profitable trade. If it doesn't, just manage it if it goes into drawdown. So this one bounced up to the resistance zone, sold again, came back down here to this resistance zone. This is where I bought. Okay, and remember there's this next support resistance zone right here on the 4-hour chart. If you go further back, it's a support and resistance zone from right there. So price came into that zone. I bought a second time. This one came up, closed the first buy at break even, and then closed the second buy in profit. Then I entered a sell because this is a support and resistance zone, right? Price bounces at support resistance zones. That sell didn't work out. what ended up happening is price ended up continuing against my position right here when I entered this sell, continuing against my position. Price wasn't really at a clear support and resistance zone, so I didn't add a second position. I would have added it if it would have came all the way up into here. I would have added a second position. Then when price would have come back a little bit, I would have closed the second one in profit and the first one around break even. I didn't add a second position because it wasn't really at a clear support resistance zone. I do not add unless price is at a clear support resistance zone. Price ended up coming back though, and I was able to get out of that sell right here at break even. And then what did I do? I entered a buy. Why? It's support resistance zone. Price is either going to bounce there or it won't. And if that didn't work, cool, I'll buy again down here. I'll buy again down here. I'll do whatever it takes to just get into the position at logical areas. And then I'll manage those positions based on how price reacts at the areas. This one happened to work out easy. Like I said, I broke this trade down. It's one of the ones I called in the live sessions as well as in my Discord. It's hard for me to call these trades out because they'll typically occur so quickly, and how I'll manage them and getting in and out of positions, this and that. So I can only really do it if I'm just trading it live, like on a live session, or just putting a screenshot of as soon as I enter a position in my group chat in the little scalp trading Discord server with Mission FX clients. But again, like this one just bounced so easy. And after that, I was done trading this for that day. Asian session occurred. This all happened, and then Friday, it was NFP on Friday, and price was just in a range, so I didn't trade at all yesterday, which was Friday, but still. And I've been doing this over and over and over, like over and over and over, just for like this specific way for like the past 5 weeks. I modified my original GBP JPY scalping system when I realized that most of the trades that didn't work out, I was able to get out of them at break even. So I started asking my question, why should I even put in a hard stop loss? Like, why should I even do that at all? Why not just use a position size that's not too heavy and not too small, and then just manage positions if they either go into profit or drawdown? Because I noticed most of the trades that I'd close in the negative, most of them would come back to the entries. So it seemed goofy to me to just have a stop loss at all if most of the trades would come back to the entries. So, like I said, you got to be cool as a cucumber. You got to be super relaxed. All you have to do is just religiously buy and sell at support resistance zones. If price is at a resistance zone, that's a terrible resistance zone. If price is at a resistance zone, just sell. You don't know what's going to happen. If it breaks past it and test, close the sell at break even, enter a buy. If that doesn't work, let it break through the zone, right? You're stuck in a buy. Let it bounce at the next zone, buy again. And when it comes back up, close that first buy at break even, close the second buy on profit, and then enter a sell. And you can just literally like manhandle the market. Or if you're a woman, you can woman handle the market to make as many pips as you want. Well, not as many pips as you want, as many pips as the market will give you, but you just follow the moves. Don't trade based on like your ego or your speculation. Trade based on what you see. Follow the market wherever it chooses to go. Profit off of whatever scenario ends up playing out. Okay. Another thing, like I said, is don't look at your P&L. I don't look at my P&L because sometimes trades can go like into $2,000 profit, come all the way back to break even, go negative 500, go negative 1,200, negative 1,500, then I'll add. And then from there, it'll come back to break even on the first position. I'll make like 1,500 on the second position, close the first position at break even, then I'll sell, and then I'll follow the market around wherever it decides to go based on where it's breaking and retesting levels. But don't look at your P&L while you're in positions. Just don't get attached to the money. Don't get attached to the trade idea, the potential outcome. Just be willing to follow the market wherever it goes and profit off of whatever scenario happens to play out for that day. So I've showed you guys all this stuff. I've showed you a bunch of practical examples. It is literally this simple. The way that you do this is by changing your approach to the market. You do not have to be right every time, and you barely even have to be right half the time to make money trading. Be willing to profit off of whatever happens to occur. You don't have to worry about speculating and then getting stopped out and then wondering, why didn't it bounce here? What did I do wrong? Blah, blah, blah. Who cares? It's okay. It'll bounce at some support resistance level 99% of the time. Just add to your position on support resistance levels. You'll usually get out like 99% of the time in either a profit or a break even. That's what happens 99% of the time, as long as you're using like higher time frame zones like here on the minute, 15, and 1 hour. Don't do this on the 1 minute because prices can really extend on the 1 minute. But on the 1 hour zone, the 15-minute zone, it's only a matter of time before price finds support and starts bouncing somewhere. So if you're in sells or buys and it's going against you, it's going to bounce somewhere eventually. Just be willing to wait for clear levels to be reached, enter at clear levels, then manage your trades based on what occurs. So if you like this video, please hit the like button, consider subscribing and watching a few of my other videos if you're new here. And if you'd like more personalized help from me personally and my team to develop your trading system, to test it, to have an evidence-based scientific approach and intuitive approach to getting profitable in trading, hit the link in the description below. Check out my free training. You can see what it's like to work with me and my team. Hope you guys have a great rest of the day and happy trading. Cheers.